A pocket of strength for the markets has been autos and auto components, and within, auto components, I'm usually using that term. I think tire companies have been on a really strong bull run. The question, the next guest is a very special guest, the management of Apollo Tyres, joining us on the show to talk about the growth prospects for the space, for the company, and what is it that Neeraj Kanwar is seeing across the globe in this pocket as well. Good having you, Mr. Kanwar. Thanks so much for taking the time out, and thanks for speaking to us at Bloomberg Quint. I don't think tire companies could have hoped for a better last 12 months in terms of all things falling into place. The demand, or rather the duty on Chinese tires, the recovery in the CV space, passenger vehicles doing very well too. It's been a great last 12 months. Do you expect that momentum to continue?
Well, firstly, I don't think it's been one of the greatest years last year, given that the raw material prices are still high. It's been a challenging year as far as margins are concerned. But yes, on the overall revenue side, it has been very positive, especially when we look at various aspects and reforms that the government has taken in terms of demonetisation, GST, really impacted the Chinese imports into India. At one point, they were nearly 30% of the truck radial market. Today, they are down to nearly 1/3 of that. So it's really helped the Indian tire industry's growth within India. Also, the anti-dumping duty came into effect in the later part of the year. So Chinese tires have come down. It's helped the revenue stream for the Indian tire industry. But still, it continues to remain a challenge on the margins. Raw materials are still challenging across the border, may it be natural rubber prices, oil prices, carbon black availability. These are all causing challenges to the bottom line. But as far as going forward is concerned, I'm very bullish. I see the momentum still up, very positive. Both on the CV side and on the passenger vehicle side. And I see Q1 and Q2, at least the first half of the new fiscal year, I see double-digit growths coming in as far as Apollo is concerned.
Mr. Kanwar, so yeah, actually I was trying to talk about the demand and really just India demand. We'll talk about the global scenario and the raw materials as well. But purely the demand, the fact that there is this anti-dumping duty plus the resurgence of the auto demand and GST as well, I would presume that would have played a small part, and wanted your opinion on how big a part could that play in drawing the demand from the unorganized to the organized space. Do you see that being a telling contributor when you're talking about this double-digit demand in the first couple of quarters?
Well, like I said, all these factors are playing a positive sign to the economy, especially to the tire industry. GST in the long run, yes, it is going to help the supply chain. Already we are seeing signs of it. It's also helped us of the cheap imports that were coming in from China, so that's also helped us a lot. And I see that the momentum, given the infrastructure that's going on in the country, given the government is investing a lot in infrastructure, this is going to give another growth to the CV industry, which is again going to help us on the revenue side. In fact, today I see that the demand is in excess of what we can really supply to both the CV industry and to the passenger vehicle side industry. So times on the revenue side are good.
Mr. Kanwar, good afternoon. We've seen good monthly sales number also being reported by a lot of these automakers, and especially the CV side, as you already highlighted, is doing quite good. You derive almost 40 to 45% of your revenues from the truck tire space. Could you tell us how is the demand shaping up there? Because this is one segment in the last 3 years has not seen much of growth.
In the beginning of the year, we started, I would say it was a flat growth rate. As we went along, after demonetization, after GST coming in, we've seen uprise, a growth coming in. specifically for Apollo, because Apollo plays, as you mentioned, Apollo plays a major factor in the CV segment. 60 to 65% of our sales is in this segment. We are the leaders in this segment. In truck bus radial, we are upwards of 28-29%, and so are we in the buyer segment. So I think when I see the CV segment that's gone by in Q4, we've seen a very good positive trend as far as growth is concerned. I would say in the high teens is where I would put a number to. We still have to come out with the results, but as far as volume is concerned, I'm looking at a high teens volume growth in the CV segment for Apollo. Given that we had already envisaged this upsurge coming, and we had taken on a capex improvement program in Chennai, a growth capex in Chennai of taking our current capacity and doubling it up from 6,000 to 12,000, and that's going as per timelines. We would be touching close to 9,500 tires per day today, and we are reaching our 12,000 in another month. So that should really give us another boost to our top line growth once that peak capacity has been met in Chennai, and that will obviously reflect in revenues.
Since you spoke about your capex plan, could you talk to us more about the new plant in Hungary? How are the operations shaping up there? And I guess you were also investing in Andhra Pradesh.
Yeah, sure. So, as you know, in Hungary we've invested close to 500 million euros. I think the plan is going as per what was outlined. We are currently at around 8,000 tires in the passenger car segment per day. We are ramping it up very fast. We're supposed to reach by September 16,000 car capacity per day. So we are, as per timelines, we are moving ahead. Truck bus radial tires are expected to launch in the month of May, June of this year in Europe through the Hungarian plant. So no complaints that our Hungarian capacity is going as per what we have outlined. We are very happy with Hungary. We are very happy with the work culture there, and we are seeing the production numbers and the quality numbers coming out in the right manner. Secondly, Andhra is what you just mentioned. We did take over the land last year. We did sign with the Andhra Pradesh government. Currently, I'm not in a state to tell you where, the amount of quantum that is going to go into Andhra, because we are still at a project stage. But what we are looking at is building a capacity of nearly 16,000 passenger car tires per day, plus continue to grow our truck story as the CV segment in India is growing, and that we are looking at making a capacity of close to 3,000 tires, truck radials per day. So that will again give us a boost in the next 18 to 24 months when that capacity comes online.
The assumption, Neeraj, is that for you as a company, the capex intensity will ease off post FY19 and your free cash flows will improve dramatically post that. Are these reasonable assumptions, or do you believe the timelines could extend a bit?
No, I think this is a realistic assumption, because all the capacities are going to peak in this year. So FY19, FY20, you will see capacity enhancement increases happening and free cash flows will come in. The investments that I'm talking about in Andhra are only going to start in the later part of FY20. So free cash flows should come in, and the revenue growth that you will see is going to come in because we will be reaching terminal capacities by the end of this fiscal year.
And I would reckon that Europe would start contributing in a meaningful way as well, because unless I'm wrong, after the first week, 9 months, you had already started seeing some improvement in the European region.
Yes, so you will see that in Q4, that the year that's just gone by. I think we've done very well in Europe. Even though the economy has been maybe 1 to 1.5% growth, but I think we have surpassed that, and we have gained on market share in Europe. Our volumes have done good for us. So we are slowly inching up, and Europe is coming back into action for us. given also that Hungary is coming online and we are getting good cost of manufacturing coming out of Hungary, good products. So overall, I'm pretty bullish about Europe and the way I see Europe going forward.
Mr. Kanwar, just before we let you go, the outlook on rubber prices, because that's been the reason why most of the tire stocks have been trading around their 52-week high mark. And I also wanted to know, the December quarter margin saw a bit of blip, so can the fourth quarter numbers be better considering the rubber prices have been coming off?
So rubber prices have really not been coming off. I would say they've been at a similar rate as before. So margins would be under pressure. I would not like to project anything for quarter four as yet. But as I mentioned already, on the whole, raw material basket still remains a challenge for us going forward. And that's really going to be a big challenge for the industry. While the revenues are going to be growing because of the growth coming in the Indian industry, the challenge still remains the cost push that one is having and the effect that's having on the balance sheet.
Okay, Mr. Kanwar, we'll let you go on that note. Appreciate you joining us today and taking us through what's happening with the tire space and also with Apollo
Thank
Tyres.
you.